A Dubai developer just abandoned a 2,300 acre project in DFW, and it's not the only big story shaking the Metroplex this week. Welcome to Jesse's weekly DFW real estate update. I'm Jesse Showalter. Let's get into it. Coming up, a controversial sustainable city in Kaufman County is officially dead, and what that means for housing out east. Nationally, a new report shows 78% of buyers are closing below asking price right now, and we'll break down exactly how to use that to your advantage. And we've got a brand new $1.5 billion Agri-hood breaking ground in Anna, Texas, with a working farm right in the middle of it. The controversial Sustainable City USA project is officially off the table. Dubai-based developer CSEE Holding has scrapped plans for a roughly 2,300 acre mixed-use development in Kaufman County, a project that promised housing, tech infrastructure, and green energy design. Texas Attorney General Ken Paxton and U.S. Representative Lance Gooden confirmed last week the proposal is no longer moving forward. The scale of this thing was staggering. The largest completed sustainable city overseas spans about 165 acres. This Kaufman County proposal would have been nearly 14 times that size. Plans called for up to 20,000 residents, and that's where the controversy started. Lawmakers and residents raised concerns about national security, water supply strain, and reports that the development was designed to incorporate Islamic law. AG Paxton opened a formal investigation in February, and within weeks, the project was dead. The developer's statement said Kaufman County was one of several locations evaluated and that the project remains part of their long-term vision. But no land was ever purchased, and the 2,300 acres are staying right where they are. Here's the real estate takeaway. That's a massive block of speculative inventory now gone from the Eastern Corridor. Attention out that way shifts back toward proven builders in Collin and Hunt counties, which brings me to our next story. The smart money in DFW is moving west, and now there's academic data backing it up. At the 2026 Real Estate Symposium at UT Arlington, Dr. Sriram Villapuram, Associate Professor and Director of UTA's Ryan Riley Center for Urban Land Utilization, identified what he calls the Westoplex as the region's next major growth frontier. The reason is pretty straightforward. The eastern side of the Metroplex, Dallas, Collin, Denton counties, is running out of room. Land is constrained. Development costs are climbing. Meanwhile, Western Tarrant County and surrounding areas still have available land and relatively lower prices, and that combination is pulling corporate expansions, industrial tenants, and population growth westward. DFW continues to attract more than 100,000 relocators a year from higher cost markets. Communities like Fort Worth's southern and southwestern quadrants, Burleson, Mansfield, Crowley, Aledo, and Weatherford, are increasingly absorbing that migration. If you're watching inventory trends or thinking about where to invest or where to find the value before the crowd gets there, the Westoplex deserves a serious look right now. But DFW isn't alone in feeling these shifts. Let's zoom out nationally. A new report just dropped, and this number stopped me cold: 78%. Cotality, formerly CoreLogic, released its March 2026 housing report this week, and it shows that 78% of home purchases nationwide closed below asking price in February. That's up 3 percentage points from a year ago. Let me put that to you in plain English. If you're a buyer sitting on the fence, most buyers in today's market are successfully negotiating below the list price. That's the data. Nationally, months of supply now sits at 4.5 months, about 1 week more inventory than the same time last year. Unsold inventory is growing. Rental prices are decelerating. The market is finding its balance. And here in Texas and in Florida, buyers have even more leverage than those in Chicago, Boston, or New York, which are still posting stronger price growth. So how do you use this? Start by targeting homes that have been sitting 30 days or more. Those sellers are motivated. Come in with a competitive but below ask offer and ask for closing cost concessions. The worst they can say is no, but chances are they will still negotiate with you. Now, on the seller side of the equation, a massive piece of legislation just passed the Senate that could eventually change who you're competing with for that home. The largest housing bill in decades just passed the U.S. Senate, and it includes a provision that could force corporate landlords to sell off thousands of single-family homes. The Senate passed the 21st Century Road to Housing Act by an 89-10 vote. That's a rare, sweeping bipartisan margin, co-sponsored by Senator Tim Scott of South Carolina and Senator Elizabeth Warren of Massachusetts. The House previously passed its version 390-9. Here's the headline provision. Section 901C would require large institutional investors, defined as any entity controlling 350 or more single-family homes, to sell purpose-built single-family rental properties within 7 years of purchase. Now, important context. The bill would not force existing holdings to be sold. It only affects new purchases made after the law takes effect. So the institutional landlords already sitting on tens of thousands of homes in DFW, they're going to keep them for now. The home building industry is pushing back hard. NAHB Chairman Bill Owens warned the 7-year disposal requirement could slash single-family production by nearly 40,000 units per year by effectively eliminating the build-to-rent model. And critical note, this bill is not yet law. It heads back to the House for reconciliation, and the president has indicated he won't sign new legislation unless Congress first passes separate voter ID and election reform measures. So there are real hurdles still ahead. If it does pass in its current form, DFW, which has one of the highest concentrations of build-to-rent communities in the country, could see thousands of those homes eventually hit the resale market over a 7 to 10 year window. Worth watching closely. That national picture is showing up directly in mortgage rates right now, so let's get into the numbers. Here's where rates stand as of this week's most recent data from Mortgage News Daily. The 30-year fixed is sitting at 6.47% on Tuesday, March 31st. Rates are up roughly 20 basis points over the past 2 weeks, driven mostly by bond market volatility tied to tariff uncertainty. Before a midday improvement last Thursday, the average lender's top-tier 30-year rate touched about 6.7%, so we're actually a bit better off than where we were heading earlier in the week. Year over year, the 30-year is about 18 basis points lower than this same week in 2025. To put that in dollar terms, on a $320,000 loan, you're paying about $38 a month less than buyers were paying a year ago. Not a game changer on its own, but meaningful over 30 years. The 52-week range is 5.99% to 7.08%. At 6.47%, we're right in the middle of that band. Most forecasters still project rates ease modestly later in 2026, but tariff-related pressure is keeping the near-term outlook a little bumpier than expected earlier this year. Before we wrap, let's talk about something turning heads in northern Collin County. A $1.5 billion master plan community just broke ground in Anna, Texas, and it's like nothing else in North Texas right now. Sherley Farms officially launched on March 24th. The developer is Telus Group out of Prosper, the same team behind the $3 billion Windsong Ranch, Mosaic in Salina, and Mirabella in Prosper. These folks know how to build communities that hold value. The site is 970 acres, just 5 minutes from Highway 75 near downtown Anna. When complete, it'll bring approximately 3,000 homes to one of the fastest growing cities in the country. Now, here's what makes this one different. The heart of this community isn't a pool or a clubhouse. It's a 65-acre working organic farm. The concept is called an Agri-hood, a neighborhood designed around agriculture, open space, and walkability rather than cul-de-sacs and fences. More than 150 acres of open space, a central green corridor running through the entire development, trail systems connecting to downtown Anna and Greer Park, and eventually walkable retail. Phase 1 is launching with 418 lots, 45 to 70-foot lots, with a resort-style pool and amenity center going in this fall. Builders confirmed for Phase 1 include Bloomfield Homes, DRB Homes, Drees Custom Homes, Highland Homes, Homebound, Olivia Clark Homes, and Perry Homes, with the first model homes are projected for early spring 2027. Pricing is expected to range from the mid-300s to the 500s, though official builder pricing hasn't been released yet. Anna is a story in itself. The city ranked 5th in the country for population growth in 2024, up 14.6% year over year to nearly 32,000 residents. And with Texas Instruments and Global Wafers both building semiconductor facilities in nearby Sherman, the long-term job base for this corridor is only getting stronger. If you want to walk this community when the model homes open, reach out and I'll make that happen. All right, here is your big takeaway this week. The DFW market is still active, but the leverage has shifted. Buyers have real negotiating power right now. 78% of buyers nationally are closing below asking price, and here in Texas, you have even more room to negotiate than most markets in the country. If you've been waiting, the data says now is a solid time to move. That's it. That's Jesse's weekly DFW real estate update for the week of Friday, April 3rd. If you found this helpful, don't forget to like, subscribe, and share. And if you're thinking about buying, selling, or investing in North Texas, I'd love to be a resource. No pitch, just a conversation. Book a free 30-minute call in the link below. And I'll see you next Friday.